Russia and its gold, what it means and what happens next. Right now, gold isn't just reaching historic price levels globally, it's reshaping national economies. And one of the clearest examples is Russia, where gold is being used as a financial shield, a revenue source, and even a geopolitical tool. Gold prices have soared across markets as investors seek safe havens in uncertain times. But Russia's relationship with gold goes far beyond simple investment. It now backs part of its economy and global strategy. Today, we're breaking down why Russia's gold situation matters, what's driving its gold price, how sanctions and war funding affect gold strategy, and most importantly, where gold prices might go next in 2026. How Russia got here. To understand Russia's gold story today, we have to go back a decade. After the 2014 Crimea annexation, Russia began accumulating gold aggressively as a way to diversify reserves away from Western currencies. Over the years, that strategy has intensified. By 2025, Russia's gold holdings stood at approximately 2,336 tons, making it one of the top five gold holders in the world. That reflects a 122% increase since 2014. Global gold prices were already rising under economic stress, but the war in Ukraine and Western sanctions accelerated that trend. Since February 2022, the value of Russia's gold reserves has increased by over $216 billion, roughly offsetting the frozen sovereign assets the West has blocked. Some analysts note that Russia's central bank has largely refrained from big sales over this period, instead letting gold act as a form of financial ballast against sanctions and asset freezes. In contrast with short-term trades or speculative positions in gold futures, this is a strategic national reserve, a commodity that cannot be frozen abroad like dollars or European bonds. Gold's price drivers in 2025 and 2026. Let's look at the big forces behind gold's price surge, not just for Russia, but globally. Number one, safe haven demand. Gold's role as a safety asset during geopolitical tension is traditional, but it's stronger now than most have seen. Investors from individuals to central banks are adding gold to hedge against inflation, geopolitical risk, and currency volatility. Number two, central bank buying. Central banks globally, including Russia, China, India, and others, are buying gold at high levels. This institutional demand takes metal off the market and supports higher prices. Gold's rally in 2025 was historic, with one of the strongest annual gains on record, and the prices continued rising into early 2026. Number three, sanctions and de-dollarization. Western sanctions have restricted Russia's access to dollar, euro, and other financial instruments. Gold remains one of the few fungible assets Russia can use internationally, boosting its strategic value. This plays into a broader trend of de-dollarization where countries seek alternatives to the US dollar system, sometimes in gold and yuan. Number four, domestic market dynamics. In addition to state reserves, Russian banks and citizens are buying more gold domestically as inflation and sanctions weigh on the ruble and currency options shrink. This dual layer state plus private demand supports underlying price strength in Russian markets. Russia's selling gold. What's happening now? Recently, there are signs of gold sales emerging from reserve stacks, which is unusual given Russia's prior accumulation. Russia's central bank has begun selling physical gold from its reserves, not just shifting metal between reserve accounts to support budget needs. This mirrors earlier sales by the National Wealth Fund, which sold a significant portion of its sovereign gold holdings, reportedly reducing its gold from over 400 tons to under 200 tons to fund government expenditures. Some observers see this as a pragmatic response to fiscal pressure. Others argue that selling hard assets from reserves is a sign of financial stress, when a sovereign's revenue streams are constrained by sanctions and limited access to global capital markets. This tension between using reserves for stability versus liquidity puts Russia in a delicate balancing act. What this means for the ruble and global markets. Gold's strategic role in Russia's economy has real implications. Ruble support and inflation. Gold sales domestically can provide liquidity and support the ruble, even as sanctions limit foreign exchange. Reserve composition. Gold now accounts for a much larger share of Russia's total reserves, helping offset currency and asset freezes abroad. Geopolitical significance. Russia's gold strategy highlights how precious metals can be deployed as a tool of economic statecraft, buffering against geopolitical pressure and diversifying away from traditional reserve currencies. Price forecasts and what could happen next. Where might gold go from here? Bullish factors. Continued geopolitical risk, ongoing central bank purchases, safe haven capital flows. Analysts have revised gold forecasts higher, with some institutions estimating gold prices could reach or exceed previous record levels. Gold safe haven status, especially amid conflict and inflation concerns, could keep demand elevated. Bearish risk factors. A major geopolitical de-escalation, central banks tightening monetary policy, a significant global economic rebound. If risk appetite returns, some of the premium on gold could soften. Conclusion. So what's the big picture? Russia is using gold as both a strategic reserve and economic tool in a highly constrained environment. Its gold holdings have provided a cushion against sanctions, but selling assets to fund economic pressures raises new questions about long-term stability. Gold prices are being shaped by a complex mix of central bank behaviour, geopolitical risk, and investors seeking safety. That's why gold prices are not just rising, they are reshaping the global financial landscape. Now I want to hear from you. Do you think gold prices go higher as geopolitical risks persist, or do they break lower once tensions ease? Comment higher or lower below, and subscribe for daily precious metal insights.